Hey everyone, welcome back to Corporate Decoder, the place where we decode the corporate world. Today we're diving into Upstart Holdings' latest proxy statement. Think of it as their annual report card and playbook all rolled into one. Get ready because there might be a few surprises, including some leadership changes, and as always we'll be taking a closer look at how they're paying their top executives, and as always we'll be taking a closer look at how they're paying their top executives. This isn't just any document, it's a definitive proxy statement, meaning Upstart is officially asking its shareholders for their votes on some important decisions. These votes will decide who sits on the board, who audits the books, and whether or not the top bosses are getting paid fairly. It's like a corporate popularity contest with real money on the line. First up, there's the routine business of choosing the company's official accounting firm. The board is asking shareholders to say yes to Deloitte and Touchel as their independent registered public accounting firm for the current year. Think of them as the official scorekeepers ensuring everything is above board. Next, we get to the election of directors. Peter Bernard and Paul Gu are the nominees. If elected, they'll be part of the board until 2028. It's a crucial decision because the board guides the company's overall strategy. Peter Bernard brings a lot of financial expertise to the table, with years of experience in risk management and finance. Paul Gu, one of Upstart's co-founders and the chief technology officer, brings his technology and company-specific expertise. There are directors not up for re-election. Kerry Cooper, Dave Girouard, Mary Henges, Jeff Huber, Ciaran Kelly, and Hilliard Terry Third will continue to serve on the board. It is important that the board of directors remain independent. The board determined that Peter Bernard, Kerry W. Cooper, Mary Henches, Jeff Huber, Ciaran O'Kelly, Sukhinder Singh Cassidy, and Hilliard C. Terry III are all independent directors. That means they don't have any relationships that could cloud their judgment when making important decisions for Upstart. The board has adopted corporate governance guidelines that provide that one of our independent directors should serve as our lead independent director. If the chairperson of the board is not independent, Kerry Cooper serves as our lead independent director. Her job is to make sure things are running smoothly and acting as a go-between for the board and management. The board held 5 meetings in 2024, and it has committees to handle specific tasks such as auditing, compensation, and nominating directors. The audit committee, made up of Hilliard Terry, Mary Henges, and Ciaran O'Kelly, is like the financial watchdog, making sure the books are accurate. The compensation committee, currently consisting of Kerry Cooper and Sukhinder Singh Cassidy, decides how much the executives get paid. There are no compensation committee interlocks and insider participation. This basically means there are no conflicts of interest or questionable connections between compensation decisions and other companies. The board's job is to keep an eye on the risks the company faces, from financial to cybersecurity, and make sure management has a plan to deal with them. The board conducts annual evaluations to assess its own performance and identify areas for improvement. When evaluating potential directors, the board looks for a mix of skills, experience, and diversity. Stockholders can communicate with the board by writing to the corporate secretary. Our board, through the Nominating and Corporate Governance Committee, oversees matters related to corporate social responsibility. Upstart has guidelines for how the company should be run and a code of ethics that applies to everyone from the CEO down. The company has adopted an insider trading policy to prevent directors, officers, and employees from using confidential information for personal gain. Upstart expects its executives and non-employee directors to own a certain amount of company stock to align their interests with those of the stockholders. Non-employee directors receive cash and equity compensation for their service. Here is a look at the non-employee director compensation. Now back to the upcoming shareholder vote. Peter Bernard and Paul Gu are up for election as Class 2 directors. The vote for independent registered accounting firm is next. The board recommends voting for the proposal. Here are the fees paid to Deloitte and Touchel. Ed fees were 4.7 million and audit-related fees almost reached 1 million. The audit committee reported that they reviewed and discussed the audited financial statements and recommended their inclusion in the annual report on Form 10-K. Now we turn to executive compensation. This proposal is an advisory vote on the compensation of the named executive officers. Known as Say on Pay, it's a chance for shareholders to voice their opinion on executive compensation. Now comes the juicy part, how much the top executives are making. Revenue increased 24% year over year, adjusted EBITDA went up, reaching $10.6 million. These are definitely some positive signs. The amount of fixed versus variable pay is really interesting. For CEO Dave Gerard, only 6.1% of his pay is fixed, while everything else is performance-based. Upstart's compensation philosophy is designed to attract and retain top talent, align interests with stakeholders, and reward performance. It is your usual corporate BS, but worth knowing. The compensation committee relies on a consultant compensator to advise on executive pay. Upstart benchmarks its executive pay against a peer group of similar tech companies. They balance selection of companies to ensure that their revenue and market capitalization were well positioned within the peer group. Dave Gerard's salary is $500,000, while Sanjay Datta and Paul Gu both get $450,000. Not bad for a year's work. The big bonuses were determined with corporate adjusted EBITDA and achieving revenue from fees. That means if the company does well, the executives do even better. If revenue from fees is over $305 million, they use a larger bonus pool. The equity awards had Dave Gerard at $722 million each. It's a lot of money tied to the future of the company. There is something called the double trigger. This means that executives only get change in control payouts if there's a change in ownership and they lose their job. Upstart won't cover any excise taxes or other tax liabilities that executives might incur due to change in control payments. If there's an accounting restatement, the company can claw back or take back some of the executives' compensation. The company has policies in place to prevent insider trading. The CEO's pay is 25 times the median employee's pay. This is an estimate that shows the difference between CEO pay and employees. In 2024, the CEO's total compensation was $7,113,468, while the average compensation for the non-PEO NEOs was $3,787,942. As of March 1st, 2025, Dave Gerard owns 13.44% of the company. That's a big stake. The Vanguard Group owns 7.38% and BlackRock owns 5.84%. The audit committee reviews any potential conflicts of interest. What does this all mean? Upstart's financials seem to be moving in the right direction. The company has a strong emphasis on performance-based pay, and its policies promote ethical behavior. The board is mostly independent and they're keeping an eye on risks. However, it will be interesting to see if revenue fees will keep going up and how adjusted EBITDA will do in the coming year. Thanks for watching. If you enjoyed this deep dive into Upstart's proxy statement, make sure to like, comment, and subscribe for more corporate decoder action.